I'm back. 1, 2. All right, we're good. Not about meme coins, but about alpha. So still fun. Hope everybody's going to enjoy this one too. I am joined by 3 of the top liquid fund traders that I've known for quite a while. So I'm pretty excited, and we were going to get a little bit into specific strategies. Maybe introduce yourself, Shiliang, and kind of tell us a little bit about, is your fund fundamental, tactical? Like, what are you guys doing?
Yeah, so my name is Shiliang. I'm the co-founder of Arbello's Markets. We're a principal trading firm providing liquidity with a focus on crypto derivatives markets. We also build infrastructure to improve transparency for the OTC markets as well. And previously, I was the founder of Ledger Prime, which is a multi-strategy hedge fund within crypto as well. Generally, we're considered a tactical trading firm. Variety of quantitative, market neutral, strategies catered to our counterparties.
So tactical is kind of like you're looking at the chessboard and all the data, and you're moving the knight across and sort of capturing little pawns everywhere, basically.
Yeah, that's just making money, collecting coins.
Just making money. All right, guys, we're gonna learn how to do that as well, hopefully. Zahir, tell us about your fund.
Thanks, Jordy. So my name is Zahir Abtekar. I'm the founder and CIO of Split Capital. We are a liquid hedge fund in the digital asset space. So we do a lot of the long bias stuff. We'll buy and sell tokens. We're pretty active in the derivatives markets, trading with firms like Arbello's, and then also on screens and Binance, Bybit, all that kind of stuff. And then also, in addition to this, we take a pretty active management on the short side of the book. So when markets are a little bit more volatile, we'll go and hedge a lot of the risks that we have. So we kind of play both sides of the market, and as you can imagine, just from the panel, it's moving a little bit more towards the liquid space from a more traditional venture asset class in crypto.
Yeah, very relevant because we have Arthur with us here, who has been a very, very well-known venture capital participant, and now focusing on liquid. So Arthur, maybe tell us a little bit about what Defiance is doing now.
Yeah, we have 2 funds. Right now, our new fund is called the Liquid Venture Fund. We invest in public crypto market with a venture-like approach. So underwriting medium to long-term investment in the crypto. So we don't do anything fancy like derivative, just focus on buy and hold on a spot, and really just focus on identifying 10 to 20 very promising crypto projects and protocol to invest in, and try to support them as much as we can. So it's a blend of the kind of like a VC style, but on a public liquid market of crypto.
Yeah, I mean, we're talking about liquid because ultimately what we've realized maybe in crypto is that a lot of things go to market faster and things happen really quickly compared to, deep tech and things like that take many years to play out. How do you feel about the extra flexibility you have on just being able to buy, sell, and how do you think about time horizons? Do you set a price target? Do you set a time target? How do you look at it?
Yeah, that's for me, right?
Yeah.
Okay. So I think the thing about crypto is very dynamic. So I don't think it is super productive to put a hard limit or a restrictions on a time frame or the exit price. And also, this is actually what makes crypto so challenging and also rewarding. Sometimes your targeted return, you expect 6 months to a year for the TCs to play out, and it play out in 3 months, and you should take profit and move on. But sometimes, due to some external changes, the fundamental did improve that you need to reevaluate your investment thesis and adjust the exit and the fair value accordingly, and you do so. So it's such a very dynamic process, and I think that this is just what the advantage of the crypto market give you. Because in the traditional venture, you get the 50x, 100x upside, but you've never been able to adjust your exposure accordingly to the live fundamental of the project. But in crypto, you can do so. In the past 6 months, we have actually seen a very big dispersion of the crypto asset return. I think someone showed a chart. We actually seen in the top 50, I think at least only less than 10 of them outperform Bitcoin on a year-to-date basis. And if you drag back to 1 year back, a lot of them actually went back to the last year Q4 prices. But yet you have seen something like Solana have went up more than 500% since Q4 last year. So all this thing is just a live kind of a change in the fundamental that we should be able to make adjustment to it. Yeah.
Zahir, how about you? And how do you think about benchmarking? Do you benchmark Bitcoin? Is that still a thing?
No, I think people and most allocators have understood that beating Bitcoin is very difficult, especially in a bear market, which is also why we set ourselves up as a liquid fund that can, it's not long only. We, make sure that we can take shorts and things like that. If you guys trade anything, it's just, you'll realize that the derivatives market is way, way, way more liquid than the spot market. We benchmark in USD, but obviously our, index and targets for our investors, for ourselves, it's against Bitcoin and ETH, and sometimes even Solana when we think, we can be really high performant. But for a fund, what that really looks like at the end of the day is, in a bull market, amazing, everyone makes money, but what happens in a bear market, right? And how do you make sure that you're not eviscerating your portfolio? The last, week or two, I think Bitcoin's been down 10 or 15% from the highs, but most people are down 50, 60% from the highs. So that's something that is a major problem for a firm like us if we're not, able to be dynamic.
Yeah, I saw a Twitter poll. Somebody was asking their followers, "Are you still up on the year or not?" And I think like 50% had lost all their gains for the year, at least in this this poll. So it kind of shows that if you're late to the game and the hype is already too much, it doesn't matter if Bitcoin's up 500% off the lows. You can still lose all the gains. Shiliang, do you have a sense of where we are in the cycle? I think everyone is a little bit confused. We're not quite sure. Are we just starting the cycle? Is it over? Like, what's going on?
I mean, I hope not. I mean, not necessarily in like the business of like picking tops and bottoms. But I like to think that previous cycles, right? We've seen these large corrections, especially around like the halving. So I'm not necessarily saying it's going to be the same carbon copy. I do think like Bitcoin, the dynamics of Bitcoin perhaps are a bit different now than they were previously. And I think after the cycle, especially with the ETF, and it becoming more of an institutional product, I think it could help drive a different narrative than previously, right? I do think like the market will recover. There's still a lot of capital that's sidelined, but I do think that even like the cycle as it plays out, Bitcoin could continue to suck up a lot of capital over time, right? I think like Bitcoin L2 DeFi summer is a potential narrative, and just the continuing institutional capital that's flowing into Bitcoin around the world. You could actually see Bitcoin this cycle kind of bifurcate from the rest of the market.
What do you guys think? Are we near potentially this like talked about but never seen type of cycle where Bitcoin goes off and then altcoins are not following?
No, so I think it'll always be hard for that to kind of exist in perpetuity. I think it has boom and bust cycles like we're seeing now. I would say to the question of, I think we were asked a similar question in Singapore Token 2049 like 2 years ago. And I think at this point, we're definitely later cycle. I don't think we're end of cycle necessarily, but obviously like I don't make 6-month, 9-month predictions on this kind of stuff. So I think what ends up happening in the market going forward is cycles as we know it in crypto will probably start breaking off. We had 4-year cycles, and that's pretty common for most growth asset classes. But for crypto, I think this is going to start changing as now there's some floor value, number one, and through ETPs, ETFs in general, and then number two also because leverage and regulation have really impacted the kind of volatility that you might see from major bankruptcy, fraud, that kind of thing. So Binance, Bybit, these exchanges aren't really seeing the same kind of leverage or like systematic exposure that might draw prices down 80, 90%. And even back in 22 when prices were pretty supremely depressed, that was mostly a function of just a lot of liquidation hitting the tape all at once. So do we really foresee that happening in the future? Probably not. In the last week and a half, we drew down about 50% of the alt open interest. So we're already kind of really seeing a lot of the froth clear out without pricings having to go down significantly.
Arthur, do you have a view? I mean, to me, it feels like maybe we're in that sort of summer, May 2021 period where we had a huge dip, but it wasn't the end of the cycle. There is like another. How do you feeling about it?
So I think actually every cycle, every new start of the market structure always change and mature. So okay, let's look at two major things. Just looking at Bitcoin alone, there's two major market structure of Bitcoin that have changed that was not present in the past cycle. First of all, is the institutional flow. Bitcoin ETF have attracted more than 13 billion of net inflows since they were launched in less than 4 months. Second thing is actually there's a lot less talk about is the emergence of publicly listed Bitcoin miners. So in the past cycles, most Bitcoin miners, you always see a very big boom bust because they need to constantly sell their Bitcoins to fund their operating expenses. But with them being able to publicly listed, they are able to tap on capital market financing to pay for their operating expenses and not sell so much of the Bitcoin holding. So these two things actually have changed the Bitcoin market structure a lot. So which is why this is, we have a Bitcoin going up to all-time high right even before halving, which on the previous cycle, you always see after halving and you see Bitcoin going to a new all-time high again. So these two new market structure changes was not in the previous market cycle. And the next is, I think in a way that we might not follow this classical 4-year cycle, and what we have is like a complex 4-year cycle. But I think it is very difficult to be bearish on the market on a medium to long term, because one statistic that I think is overlooked but make me incredibly bullish is Binance 2023 at the beginning of the year, largest crypto exchange, everyone know that. They announced that they have 135 million of registered users at beginning of 2023. If you go to their website right now, you see they have 187 million users. And 2023 was not a bull market. It was a complex recovery market. In that market, Binance added 50 million users. I mean, we can debate how many of them are real or not, but this is the top of the crypto adoption funnel. So imagine if they can grow like more than 50 million users in a bear market or like a non-bull market, how much new user will be attracted to crypto in a bull market. So I think on a medium long term, this is very hard to be bearish on crypto. And the second thing is, crypto is one of the very few asset class in the world that attracts a natural global demand. Like beside US stocks market or other US dollar denominated asset class, you don't really have any other asset that just constantly attract like a global demands. Like anyone in Africa, Southeast Asia, China, South America will buy crypto. But if you have a stock market in China, like in Singapore, like even Dubai, you don't attract that kind of global bid. So you're very much isolated to your local market demand. But crypto is a global asset class in nature, so you always have some unknown, like some high net worth, they want to store their wealth in Bitcoin, and that added another $1-2 million of demand into crypto. And this is something that you will not see in other asset class. And if you want to see the performance of a global asset class, just see the US stock market, S&P 500 performance for the last 10 years. It's up only. Every 3-4 years, we have a new all-time high. So I think that's what really happening to crypto on the medium long term is a global asset class with a very good story, very good growth traction. So it's just hard for you to go down on a longer term basis. Yep.
Yeah, I mean, I know your fund is long bias, so you're not market neutral. You do have this bias long, and I think everybody just heard, your deep fundamental belief about the sort of long thesis. Shiliang, you're more tactical. You're kind of willing to get in the weeds maybe. How do you think about shorting, even if it's just volatility? That's another thing that can spike. How do you go about selling a call option when things can, go insane on you?
Yeah, in some ways, like I describe our business in like the information gathering business in the sense that we're providing like principal liquidity to a lot of our counterparties. And so the people that we want to trade with, obviously, counterparties, firms that are considered like poor traders or bad traders, great. We're happy to take the other side. But we also want the smartest, best, most toxic flow that are in the market, because that's a kind of flow that we can see and we can trade alongside of, right? And so in some ways, we're more than happy to provide a tight, liquid market for the most toxic flow out there, because knowing that information is way more valuable than just trading like a coin flip, right? And in some ways, as a liquidity provider, that's the business you're in, is you're basically building a community of like the smartest flow that's only trading with you, and you have the information and you can trade around it. So we're doing a lot of like, obviously like principal liquidity providing on exchanges, OTC counterparties. We're obviously doing it in a market neutral way. But that's one way of how I would describe our business.
Zahir, do you ever find shorting opportunities, or is it like a relative value thing?
Yeah, it's both. I mean, it's very regime dependent. So, in 2022, we spent a lot of time doing pair trades, putting on a lot of, kind of outside risk, because if we're holding spot altcoins or spot crypto, then we need to go and hedge that out when markets are kind of moving against us. And then, as of late, it's usually against like unlocks or things, new token launches that we think flop, that will go in short, just to make sure that our book is kind of balanced. I think the problem, again, that I've highlighted, it's like a lot of times people look at market cap of an asset, and it's interesting, but in crypto, it's kind of a lie that we all know, right? Like the FDV conversation is FDV or circulating real. And I think what ends up happening is that once these tokens start unlocking, people don't really think about the FDV in the right way, and I think even the FDV is kind of misleading. So we just look at it, in terms of what is the real life liquidity on chain or also on centralized exchange. So when we do that, we're able to kind of determine like, okay, if I have $5 million in, X alt, right, then how much can I actually exit at that point, right? So things like daily volume are important, but also like 2% book ratio depth, 5% book ratio depth. We don't want to be the only player in one market and kind of look at it at the end of the cycle and be like, we can't get out of this thing. So
yeah. I mean, how much of crypto right now and crypto trading does it feel like it's PvP? Because when the market's growing and everyone, is up, then it's okay. But when things start to go choppy, I mean, Arthur, you've been on the VC side. When unlocks happen, and now we're in this like stage. I think my co-host on Study Labs, Thicky, was saying there's like 200 million of altcoins getting released, every day, or some number like that. Do you look at unlocks? Do you kind of know the other VCs? Like which ones are going to sell, which ones don't sell? Like how tactical and how PvP does it get?
Yeah, I think this is, it does impact the market. Yes, we do look at locks up. So we have a very high preference for coins that, doesn't have a very aggressive unlock schedule in the next 12 months. And we generally prefer coins that are mostly diluted already. So I think this is a very nuanced topic. I mean, sometimes FDV matters, sometimes FDV doesn't matter. So it's very context specific. So you cannot just say, like, this is always going to be apple for apple. It's very context dependent, because you also need to know the makeup of the unlocks. Like, sometimes by the foundations or by the team, they're usually not going to sell that aggressively, but sometimes it's like a VC, they're already up a 50x or 100x, they're going to sell. And actually, even among a VC, you also see a very different dynamic. Some VC are just very, due to whatever reason, they are very quick to realizing the gains, but some VC are happy to be a bit more long-term in supporting if they are still bullish at the current valuation. So that's actually why you pay the active manager like us to do this homework, talk to the market participants to understand the different dynamics between different unlocks. Yeah, but generally we are quite careful because I think that just, especially the past cycle, I think 2021, 2022 vintage VC funds, they raised a lot, very little DPI. There is definitely pressure to return some capital for them to raise the next fund. So we are usually quite careful for the projects with the vintage VC fund that, from the 2021, 2022 period, yeah.
Yeah, and one thing that was kind of relevant you were saying backstage is you're seeing a lot of opportunities that are not massively capital, like there's a certain size that you can put in that's maybe more, for an individual trader rather than like a fund. And there seem to be a lot of those opportunities. Maybe you can like discuss a little bit of like what you're seeing that maybe you can't deploy, industrial size, like 8 figures into a position, but somebody can put 6 figures and do super well on it.
Yeah, so I think this is one of my biggest belief. I think that crypto remain one of the very few places where it is consistently easier for retail to outperform institution. I mean, yes, there was a lot of unhappiness about the VC getting and sit round way cheaper, 50x after listing, but those are mostly unrealized gain, and these VC are like take a very long fund life to get or to exit. But as a retail, there's a lot more opportunity that the big funds can't do it. I mean, we are even not that big, but there's still a lot of opportunities that we just feel that it's a bit too risky and too challenging for us to deploy. Like yield farming, all the high risk DeFi protocols, or even meme coins. Right? I think meme coin of Q1 is just a classic example that retail just massively outperform most of the institution because it's for various reasons. Number one is just like a reputation, or like, you know, if you lose money in meme coin, it's also very hard to just explain why do you lose money in meme coins, like especially how crazy the meme coin cycle is, and just imagine some of the name of the meme coin is not even investable if you're having some LP from like a very serious kind of background, like it's just completely untouchable. So like farming all the new airdrops, or like sibling your airdrops, like this is something VC can't do. Right? In fact, I think there was previous cycle, there was one VC that was found to be sibling their own pot and they will just completely destroy their reputation. So just a lot of these things that prevent funds or institutions from actively doing, but retail can do this without any constraint. And I think this is where retail have the opportunity. Like you don't really need to care about the game, like the big VC are playing, because they're looking at like a 3-5x return over 3-4 years. But what they care about is, can they put 50 million to work, 100 million to work? And you do not have that constraint. You should actually focus on what really makes sense for your capital size. And I think there's actually still plenty of opportunity that is very good for like between few 100,000 to like less than 20-30 million kind. Yeah.
Yeah, I mean, I was trying to get, I had Hasib from Dragonfly, runs a big fund, and I was trying to find a way that he would buy meme coins into his portfolio. I was like, what if it's just a mascot? What if this? It didn't really work. So like you said, there are some places that the large funds won't go. Zahir, how about you? Like, do you get in the weeds? Do you kind of find these tactical opportunities?
Yeah, so we're the newest fund, I guess, like on stage. For us, when I was setting up the structure, the legality of what we were going to do, and we were pitching earliest investors, we just told them, we're going to leave this as open as possible. So we do liquid mandate, but we can do a lot of things within that bucket because, truthfully, I don't know what will be a thing in 3, 6, 9 months from now. So whether it's meme coins, whether it's NFTs, whether it's whatever it is, right? I don't know. I mean, obviously, we're not going to spend half of our book doing meme coin buy and sells, but we want to be a part of the action wherever the liquidity kind of moves to in crypto. And these narratives, whenever they're forced, they never work out. But whenever it's organic, it just like sparks like wildfire, and it's there for 3, 4, 5 weeks, and people hit like 1,000x within that time horizon. And if you're not there, you're not capitalizing on that. So for us, it was very intentional when we were setting up the fund that we have the capacity and opportunity to do these things. And I think this is, to Arthur's point, this is one of those areas where if you're running a fund, it's much more complicated to be able to do meme coins on average, because for us it's like we have to multi-sig into the transaction. Try doing that on Solana today, right? Or 2 weeks ago, like it's impossible. Your transaction will never go through, right? Whereas if you're some guy on a Phantom wallet, like clicking in like 3 or 4 times, maybe your transaction goes through and you can participate. So in that way, it's definitely feasible for retail to kind of participate and do well. But I think what we're also noticing, like to counter my own point here, is that there's a lot of market exhaustion too within more retail names. Like new token launches, Athena does well, right? And then the next token behind it that launched before it just starts losing all liquidity. And it kind of shows that we're not getting as many new inflows as we hoped we would. But I think, after coming to Token Dubai and meeting some more allocators and people in the space, there's a renewed sense of optimism that people are maybe, more institutional capital is taking, crypto seriously again. So hopefully, kind of does well for the market overall.
Yeah, Shiliang, like, how do you see the flows coming right now? Does it look like they're slowing down? Are they going to pick up again? How does it look?
Yeah, I'll just quickly add to what Zahir and Arthur said. One is I think like we're seeing, compared to like previous cycles, a lot of venture funds are playing a lot more in the liquid space, not just from a like liquid venture perspective, but also the actual like hedging, using derivatives, things that you didn't really see nearly as much in previous cycles. And 2 is another example is like the Solana like FTX estate sale. A lot of like venture funds actually participated in that and basically wrapped it as a venture investment. There are certain funds that wrapped it into, I mean, the thing itself has like a multi-year lock, right? So in some ways it is like a venture investment. There are others that bought Solana in an open market, wrapped it into a structure where they can't actually touch it for 3-5 years, and that's basically considered a venture investment. So we're starting to see actually a lot more of that kind of investment style that we haven't seen like previous cycles. And then going back to just general flows in the current market, end of last year, early this year, at least from like the options market, it was pretty much like 99% just call option buying, right? Anyone and everyone was just buying call options. Bitcoin, like Ethereum, we've seen call option buys in like meme coins, any alts, a ton of that. It's slowed down a bit, I would say. People have pushed out their time frames, so obviously the Ethereum ETF is probably not going to come. We've started to see significantly less flows in Ethereum. In terms of like flows in the time frame, I would say like, people are pushing out to like September, December time frame. And so if you're looking at like a longer tail options markets like December or even March, there's been a ton of actually buying out there. And like the implied vols, if you look at the implied realized like vol ratio for 9 to 12 months, it's the widest it's actually been in the past 2.5 years. So like there's a ton of like long dated option buying that market makers can't supply. But the like realized volatility actually like hasn't really caught up yet. And so like that's a kind of flow. But like near dated, I would say people are pretty cautious. People have been buying some protection. We're just sitting on the sidelines.
Yeah. I mean, let's talk about something a little bit spicy, which is liquidation. So, you know, crypto has more leverage than any other asset class. And when things are going good, everyone's happy. And then we have these days where, you know, 10% plus, you know, we've seen altcoins even lower. You guys are multi-cycle investors, so you've seen it all. You know, probably a lot of the audience has been around a while. We've seen these crazy moves. What does it take to like thrive in these conditions? Like, do you keep some dry powder all the time so that when the inevitable happens, you can invest, or do you just fully allocate and just, you know, just take a deep breath that morning and you know, maybe take some ashwagandha or something and try to chill? Like, what do you guys do? Maybe Zahir, you can.
Yeah, so, you know, this is something that I talk to you about quite often, but also I sent out this note like a week ago to our investors, just kind of explaining what liquidations are, how they work, and why they're important to us. So usually when there's like big liquidations that happen, I'm sure you guys are here, you know, X amount of people got wrecked, or X amount of, you know, X billion dollars got liquidated in crypto markets. What does that actually mean? So it generally means that those positions are now owned by the exchange, and they have to go dump those positions at market. So they do it right away. So those are forced sellers. And we typically on the buy side look for those kinds of events to go and place our bids, our sort of you know, buying spots, because we love when, well, we shouldn't say this, but it's the best buying opportunity when someone else is forced to sell in the market. So that's kind of the opportunity set that we look at the most. Crypto's leverage ratio has substantially decreased since 2019, 2020. And we're still seeing that kind of decrease. But every single time we see one of these liquidation events like we saw in the last week, it kind of really yields these negative outcomes for a lot of people. So that's why, you know, generally derivatives are now being, you know, scrutinized a little bit more on platform, right? People are, you know, forced to take tests on Binance and Bybit to trade derivatives, however trivial they may or may not be. So it's kind of, you know, entering that sort of market. And then for us, you know, the volatility of crypto, you can't have the upside without the risk profile. So, you know, after a while, you just have to get desensitized almost to the volatility. And we keep ample amount of cash, you know, for these kinds of events, but at the same time, we will take book leverage as well. So when we think, you know, other people are kind of out of a spot, most of crypto is just like self-forced error from other people. So, you know, when other people make mistakes, we try to profit off of that.
Yeah.
That's kind of the business, and, you know, same thing for market making, or, you know, flows trading, or even venture investing to some extent, right?
Yeah, Arthur, how do you feel on these like red days? Are you sort of, you've seen so many of them now. Some of them were much deeper. This is like a little small thing compared to what we had, let's say, in the Luna days. How do you react on those days? What does the investor in you look at the market and think? Are you looking at all the coins and like, oh, okay, maybe like a shopping list, like, okay, this one went to 60 cents. How do you do it?
Yeah, so I think actually at a different level of capital you manage, there's a different optimal way to deal with it. I think at a smaller capital, it actually makes sense for you to be a bit more nimble, you know, to like move in and move out, and then you do have the flexibility to do so. But as the capital size increase, it no longer becomes feasible. So I think that it's just really about like you need to optimize the kind of risk-adjusted return you are taking. And I think that generally it always makes sense to have some dry powder because the value of those dry powder like exponentially increase when market is having a stress event. So it always makes sense to keep a little bit of that. When a stress event happens, it's like once in a year you get this kind of great buying opportunity, or just not just buying opportunity, a deal-making opportunity. And some people who like just completely blew up, and you need to take over their position, all those kind of things. And having some dry bullet for that is always very important. Yeah.
It reminds me a little bit. I was reading about Jane Street, and I have some friends there, so they've confirmed that this is true. They always are buying out of the money puts, so they're buying these like extreme protection. And once a while, when the market actually hits that level, very unexpectedly, they're paying like a small amount constantly. They're losing money, right? They're sort of like giving out. And then that one time, they have liquidity when nobody else has liquidity because they've bought that protection. And that reminds me kind of a little bit of what you're saying. Crypto seems like a very extreme version of that, where you'll see things spike to prices. I think, especially with perpetuals, one example that people still talk about, I think on Ripple some months ago, the coin margin, Ripple on Bybit, there was just no liquidity to buy it back, and it was dislocated for like half an hour. You could make like 30–40%. So it shows the value of liquidity, being liquid. We all get a little bit too bulled up sometimes and forget to keep a little bit on the side.
Yeah.
So
And actually, I would argue that actually we need more public liquid investor like us, because the VC have all invested, right? They all went to the private rounds. They're not going to buy when the market is crashing. Then who else is providing the liquidity when the market is crashing? It's actually public investor like us. And in fact, sometimes we sell something higher so that we have the dry powder to buy when it's coming lower. So for any of the portfolio company that think, oh, this guy is selling, sometimes he's selling so that he can buy back when the market is crashing. He's actually going to provide some bid when the market needs it the most. Yeah. So all this is a good reason to tell everyone why do you sell.
A very good statement. We have 5 minutes left. Let's talk a little bit about specific indicators or things that you think are the most important. I know like all of you use different tools. Maybe you can tell people, for being successful, what specific tools you like or what indicators. For me, looking at funding rates is the easiest thing, because when funding rates are 20 bips a window, like we were seeing on some of the meme coins, it means like people are just like fully speculating. They don't care about, the cost of the funding, the capital cost. Do you look at capital cost, Shiliang, or what kind of indicators really signify what's happening?
Yeah, I mean, definitely like capital cost is just like another word for like leverage in the system, basically, right? You can look at like skew of options markets. You can look at funding rates. I think like something else that's been pretty interesting that we've seen, it's more like I would say like on chain actually, is like now there's like this proliferation, and we promise you here we won't talk about meme coins, but like there's been like a proliferation of all these like meme coins and all these like new chains like Base and Degen. But something that interesting that we kind of noticed was that like, and it was a pretty good signal actually, and Alex from the Anson isn't here, but like you can kind of track like these newer like meme coin launches and like the wallet holders that are like holding them. It's like extremely transparent. And you can kind of see like what they're doing and when they're kind of like starting to like get in or starting to get out. There was like one recent example in Degen, like based L3, where like some of the insiders like started selling, and basically like very transparently, like a few hours later, like the price like started to weaken like significantly, right? And you can't necessarily like trade derivatives around it because there are no like derivatives from any of these like new tokens. But it does like give a lot of information for like tactical traders of like when you should be getting in and out. Because at the end of the day, it's really just like supply and demand.
Yeah, so generally, we have an in-house astrologist, and then we chart
Astrology
the moon
and crypto seem to be like very intertwined.
No, okay, being more serious. Overall, I mean, it's a pretty simple formula. It's just and I've tweeted about this for like 7 years now, and it's been the same thing, and people are always like, great post, great note. And I'm like, it's not complicated, but we take a look at how many active positions there are in the market. We take a look at how much people are paying to manage those active positions, and then we kind of start determining, okay, we need to start cooling off here, or we should start buying back because everyone else is kind of out of it. And then, even to the point that Shiliang mentioned, like something we look at is like how much a network gets used. So the more the Solana network was getting used, the more kind of the chain was breaking down because everyone was rushing to make a meme coin. We took that as kind of a sign that's like, it's very bullish, but at the same time, like people can't actually go and buy on Sol now. It's a big problem. Or same thing with Base. It's kind of reaching the end of the risk spectrum, and that's usually signals to us like we should be cashed up a little bit. People are flexing on me, telling me that they made X amount every single day. So usually that's kind of what we notice. And lastly, to Shiliang's point on looking at Nansen or Arkham or whatever kind of dashboard you use for looking at on-chain stuff, it's very disheartening actually if you look at a lot of meme coins, because you'll find out very quickly that usually they're all just basically rugs. Like the team is selling almost instantly. So not the better ones, but a lot of the newer ones. So things like that are pretty helpful in making sure we don't lose our shirt in investing.
Mm-hmm. Arthur, what are your kind of key indicators?
I think the number one is really attention. So we've been finding and constantly improving of our ways of quantifying the attention any project get, because with a lack of the standard valuation model or like accepted valuation model, really like attention is what really drive a lot of the.
How do you differentiate between like a botted community and people buy Twitter followers, and you can buy agencies and pay them to generate this attention?
Yeah, I think it's actually not that hard, because if you go through to see like the abnormal kind of like a likes or like a reaction kind of engagement to some like a announcement, it's not that difficult. And also you look at the followers, you look at the comments, are they like genuine account or like fake account? If you spend some effort, it's not that difficult to help. But obviously we are using some more sophisticated tools. We paid for some subscription like Kaito to just quantify the attention and the token narrative market shares. So we're constantly trying to see what is the best way. Obviously we have some high signal people that we follow, so we think that these people present a more genuine reflection of attention. And obviously there's also all this kind of like a private investor to investor talk, what do you look at, all this kind of. So you kind of gradually form your kind of like a network of like what are things that people are really looking at. And I think this really helps to be early. You want some really hardcore believer that really believes in something, and that's usually a very good alpha at the beginning. Yeah.
Yeah, I like to go through like, even if they buy it, sometimes they're paying agencies to do it. But like you said, you can kind of go through and you look at a tweet. If the tweet has more retweets than views or something weird like that, you're like, okay, this is fishy. So you're right. You can tell sometimes.
I think it's also helpful if you like I determine a project based on how many of my mutuals follow that project, and then I'm able to tell like, okay, none of my mutuals are following this thing, but then it has like 70,000 followers or something. So it's usually a red flag. Versus something that has a lot of people that I know that are kind of a part of it or talked about it or something like that.
Yeah, I can't tell you how many million follower Twitter accounts I've seen that I don't have any common follows with. Cool, guys, we're out of time. Thanks so much for sharing your strategies and thoughts. Hope the panel picked up something interesting. And yeah, thank you guys.
Thanks.